Australian house prices have officially hit a new record, but how long can it last? ANZ staff could lose their bonuses if they don't come into the office, and radio stars Kyle and Jackie O sign Australia's biggest media talent deal ever. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 23rd of November, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Yesterday was all a bit miserable. Today it's all about money. Plenty of stories about money today.
Hey, if yesterday was fear, today is about greed, isn't it?
That's exactly right. Yes, well put.
You've got a great interview coming up after the show. John McMurdo, CEO of Australian Ethical.
Yeah, we talked to John about investing ethically. Now, Australian Ethical have been doing it for 40 years. It's not a new thing for them, a new thing for many investors, though. We define what ethical investing is, how you come about the companies that you're investing in, what you're looking for, how you engage with them, hoping that they'll change society and the world for better. It's a really fascinating chat if you're interested in investing ethically. And, of course, many more people are thinking about that, particularly younger investors.
Yeah, the statistics that John talks to you about in terms of the rise in awareness of ethical investing in the last couple of years has just been extraordinary. And as you make the point in the interview, Australian Ethical have been doing this for decades, so it is not something new for them. But for so many people, they are very new to it, and I'm sure there'll be plenty of people interested in hearing what John has to say. It's coming up a little bit later on. The main story this morning, though, Sean, big news. It is official. Australian house prices have now fully recovered from their post-COVID tumble. They are now back at record levels. But, big but here, the good news might be a bit short-lived.
Yeah, and we really dig into it, location. It does very much depend on where you're talking about. But CoreLogic's National Daily Home Value Index shows that after reaching a peak in April 2022, national home values fell 7.5%, hitting a bottom on 29 January this year. Since then, the National Home Value Index has risen 8.1%. That's as of yesterday, and it is now sitting at a new high. CoreLogic's Tim Lawless said it took around 9 months for the national HVI to move from record highs to the recent trough, then roughly 10 months to recover from the short but sharp downturn. While it might seem counterintuitive given rising interest rates, cost of living pressures, deeply pessimistic consumers, etc., the rising prices reflect an imbalance between supply and demand. Supply still remains low, about 17% below the 5-year average, though inventory levels are rising. Demand, however, is in line with the 5-year average, and that's why prices have jumped so much so fast.
Okay, so that's a good overview, the broad numbers, I suppose, across the nation. But as you say, Sean, it's all about location here. What about specific geographies?
Perth, Adelaide, Brisbane, and the regional areas of the capital's respective states are all at record levels. Hobart is at the other end of the spectrum. Prices are still down nearly 12%, while in regional Victoria, they're off 7%. Sydney still has 1.8% to get to a new record, while regional New South Wales has 5.5% to go. Melbourne has 3.6%. The ACT, Canberra, has been a poor market. It's still got 6.4% to go to hit record levels. The pace of growth is definitely easing, according to CoreLogic, and that's good news for home buyers. Another research firm, SQM, earlier in the week forecast a 4% drop in prices across the nation next year. In fact, there have been a few economists who say at best house prices will be flat next year and possibly falling. So it'll be interesting to see how that pans out. I'd caution against underestimating the Australian housing market.
Isn't it funny just how much predictions can vary between different groups who are all probably looking at fairly similar data, but just interpreting it differently?
Yeah, I mean, there are certainly pessimistic economists out there and optimistic economists out there. And I think depending on where you sit on that side of the fence, that sort of determines what you're going to say. Of course, our own Stephen Koukoulas, he predicted prices would fall about 10%. This is beginning of last year. He was right. And I think he's quite upbeat on the housing market, actually.
I love how Stephen Koukoulas, the Kook, does a podcast once a week with us called Fear and Greed the Week Ahead. It comes out every Monday. And that is enough. We claim him. He becomes our resident economist. He does so many things, and he's such a prolific presenter. He's a great presenter. He gets out there and talks to a lot of businesses, a lot of companies. He has his own business and everything. But no, he's ours.
Presenter.
He is our economist.
We own the Kook.
Indeed. How did local markets perform yesterday, Sean?
The S&P ASX 200 closed flat at 7,073 points. Not a lot going on for most stocks, though there were some pretty big movers in terms of sectors. Utilities were up, while real estate investment trusts, tech stocks and telcos were all lower. BHP and CSL were among the best performers of the large caps. QBE Insurance also outperformed, rising 2%. Macquarie Group, Telstra and Aristocrat Leisure were all underperformers, Michael. Plenty of corporate news around. Helios's share price tumbled 33% after it completed a heavily discounted $154 million share offer. It was easily the worst of the top 200. Praemium, the wealth platform, isn't on the top 200, but its share price fell 35% after it gave a weak outlook for the first half of fiscal year 24. Shares in real estate conveyancing platform PEXA dropped after CEO Glenn King told investors the economic outlook locally was mixed. Medibank's shares, they were down as well after commentary at yesterday's annual general meeting that there's no change in its outlook. Now, no change means we have to look at what it said previously, and it said further moderation in resident industry growth. No one likes moderation, really, when you're an investor. Hence, its share price was down. Infant Formula Group, Bubs, halted its shares ahead of a capital raise, and Webjet's share price rose 1% after the travel group reported higher revenue and earnings.
And what's happening in international markets?
Minutes from the latest US Federal Reserve meeting show officials saying they could take a cautious approach to raising US interest rates going forward and would only need to move them high if incoming information showed insufficient progress in lowering inflation. The comments were read by Wall Street as saying rates in the world's biggest economy are unlikely to rise any further. On the equity market, on Wall Street, chipmaker NVIDIA released its highly anticipated results yesterday morning, and investors were a bit cool on the September quarter report, notwithstanding it was better than expected, and revenue was about $20 billion for the 3 months. It was a good result from NVIDIA, but investors wanted a great result. As a result, NVIDIA's share price fell. Fickle bunch, those US investors. And finally, in foreign exchange markets, the Aussie dollar's holding. It's buying above 65.5 US cents, though I have no plans to go overseas anytime soon, so I'm less interested in that.
Yeah, of course. Isn't that a remarkable result? That the result was better than expected, and it just shows the enormous pressure on that company to keep delivering because of this surge in demand for chips. That investors wanted a great result, and a good result was just not quite enough.
Yeah, that's exactly. I mean, this is a company that's now worth, 1.2 trillion US dollars or something like that. Like, it's just phenomenal. And a year ago, I'm probably going to get it right, but it's up 200% or more than 200% over the past year. So anything it does has to be much better than people expect. Didn't happen yesterday.
That is amazing. All right, we'll be back in a moment with the rest of the day's business news. Sean, the federal government will ban businesses from paying ransoms to hackers under a new cybersecurity strategy. This is a big development.
It is. The strategy includes an extra $600 million for fighting cyber criminals, rules to force businesses to report when they've been hacked, and the creation of a special board akin to transport accident investigators to learn lessons from major attacks. Home Affairs Minister Claire O'Neil said the government would ultimately ban ransom payments. The new strategy calls for the creation of 6 cyber shields, is how they put it. Strong businesses and citizens, safe technology, world-class threat sharing and blocking, protected critical infrastructure, sovereign capabilities, finally a resilient region and global leadership. Labor will boost spending on cybersecurity by $587 million between now and 2030. That's on top of a $2.3 billion commitment it inherited from the Morrison government. Of Labor's funding increase, nearly $300 million of that, about half of it, will cover support for small and medium businesses, building public awareness, fighting cybercrime, breaking the ransomware business model, and strengthening identity security.
You've got to say, though, breaking the ransomware business model is a pretty big ask, isn't it? All you need to do is go back and listen to the interview we did last week with the team from McGrath Nicol, who are, of course, supporters of the podcast, just about the number of businesses that are still willing to pay up to $1 million or even more.
Well, it's on average, it was $1 million. So businesses are paying a lot of money.
Yeah, incredible. Big story. Now, Workplace Relations Minister Tony Burke says he has struck a deal with some of the country's biggest resource and energy companies to exempt service contractors from changes to labour hire in the Albanese government's Industrial Relations Bill.
The big miners have been very critical of the proposed legislation, and yesterday Burke told the ABC that the deal would exclude service contractors from Labor's same pay rules for labour hire. That will remove the ability of the Fair Work Commission to determine whether workers hired as service contractors should be covered by the rules. Burke said it will make it clear that if it's labour hire, it's covered. If it's service contractors, it's not. Burke said the government's intention is to ensure that companies signing up to an enterprise agreement, including minimum rates of pay, can't undercut those rates by bringing on labour hire.
I mentioned this one at the top of the show. ANZ staff have been told their annual bonuses may be cut if they fail to spend at least 50% of their scheduled working hours in the office.
So the policy puts the bank in line with a couple of other big companies in Australia. Suncorp has done it. Origin Energy has also done it. They basically link office attendance to annual performance reviews and bonuses. Now, according to the Financial Review, staff at ANZ were told that working in line with ANZ's expectations for hybrid working, as well as any specific commitments within your team, is just like any other behavioural expectation at ANZ. This means if you don't meet the standards expected, it may factor into your performance rating and performance and remuneration review. Now, ANZ has a 50% attendance target, similar to Commonwealth Bank, Westpac and National Australia Bank. The work-from-home situation is certainly an ongoing battle for some of these big banks, in fact, for a lot of big firms, really. ANZ's Melbourne-based. Now, that's the city where workers are proving most resistant to returning to the office. That's according to commercial real estate players CBRE. And, of course, last week, the Fair Work Commission recognised the productivity costs of working from home. It supported bosses' rights to get workers back to the office post-pandemic under Labor's newly expanded flexible work laws. So there is momentum building to get people into the office. And obviously, if you're not going to get your bonus because you're not in the office half the time, well, I reckon you're going to turn up.
It's a fairly strong incentive, isn't it?
It is.
Lovisa has continued to expand but recorded declining sales on a per-store basis for the 6 months to the end of September. That has added to the ire of shareholders who are a little bit upset about the company's CEO earning a $30 million salary, Sean.
Yes. At the group's annual general meeting yesterday, there was a third strike against the remuneration report in which CEO Victor Herrero earns that $30 million. Now, two strikes means there's a board spill. That happened last year, but the same board was voted back in. That's mostly because at Lovisa, there's a 40% shareholder in the company, billionaire Brett Blundy. He loves Herrero. The CEO, Herrero, is a 13-year veteran of Spanish retail giant Inditex. They own Zara, for example, and Pull & Bear. Blundy said that Herrero works unbelievably and is committed beyond anything he's experienced. But $30 million? Seriously? Overall, Lovisa has opened 35 new stores this year. It now has 836 sites across 40 markets. It expects to open its first stores in China and Vietnam before Christmas. I'm sure the CEO, Victor Herrero, is working very hard. But as I said, $30 million?
That is a lot of jewellery, isn't it?
It's actually a lot of fake jewellery.
Oh, yeah, that's a very good point. New South Wales, Sean, will have an additional 1 gigawatt of energy to use by the end of 2025 under a joint state and federal initiative, which has partnered with 6 renewable energy and battery projects to add more capacity to the state's supply.
We are going to hear plenty of these stories in coming years. New South Wales is scrambling to fill the gap in supply left behind by the closure of older coal-fired power stations, including AGL Energy's Liddell and the planned closure of Origin Energy's Araring power station. This new partnership, which includes batteries, will go some way to helping the state keep the lights on over summer. Now, Federal Energy Minister Chris Bowen said 4 gigawatts of dispatchable power left the grid over the past decade because of the closures of these coal-fired power plants. Only 1 gigawatt has replaced it. There are 6 successful bidders under this tender. They'll deliver an additional 1,075 megawatts of capacity under the federal government's capital investment scheme. But as I said, we're going to hear many more stories like this because we need more power in the grid.
Sean, the Financial Review has launched its ranking of local universities based on education and research, which are really the benchmarks for most unis around the world. The top in the inaugural list is the University of Queensland.
Go UQ. Now, the ranking evaluates performance under 5 pillars: student satisfaction, research performance, global reputation, career impact, and equity and access. UQ is number 1, followed by the University of New South Wales, then the Australian National University, Monash in Melbourne, and the University of Adelaide. Those 5 are always around the top of the rankings. Edith Cowan came in at 6th, then University of Melbourne, University of Technology Sydney, and the University of Wollongong. The one missing there, the Australian university who does well globally, is Sydney University. In the AFR rankings, it came in 15th.
All right, one more, Sean, and this one's somewhat close to my heart. I love any radio stories, really. Kyle Sandilands and Jackie O. Henderson have signed a new contract. Now, this is not just any contract. It is reportedly worth more than $200 million, and it's going to keep them on air with Kiss FM for the next decade.
Quite the investment. The deal, which runs until 2034 and includes base salary plus a revenue share arrangement, will earn each of the hosts of the Kyle and Jackie O show about $10 million a year. It's easily the biggest deal of its type ever. It also brings the show live to Melbourne for the first time from next year. Now, ARN Media, which owns the KISS network, also Gold, has also signed Melbourne's top-rated FM breakfast radio presenter, Christian O'Connell, for another 5 years. As part of the deal, so that's the Kyle Sandilands, Jackie Henderson and Christian O'Connell deals, ARN said that $7 million worth of shares in ARN Media will be issued to the three of them, not each, but combined. They'll vest at the end of the contract term.
This whole story is interesting, but the fascinating part is taking the show into Melbourne from Sydney next year, because the traditional kind of wisdom in radio is that breakfast shows in particular should be local to each market. And in particular, the gap between Sydney and Melbourne and Sydney, it would be the largest of any gap between any cities in Australia. So this is a really big move, and it's really banking on the star power, the celebrity of these two. And I reckon it could just well work. This could be a spectacular move. As you say, though, Sean, it is a very, very big investment.
Sure is. And Christian O'Connell wants to not just be a Melbourne breakfast presenter, but he wants to go national as well. So I don't know how they work that in. I mean, they own radio stations, so maybe they can do it that way. But certainly it's not just Kyle and Jackie O who want to go national, so too does Christian O'Connell. When
you then factor in all of the takeover moves that are happening within the radio industry at the moment, there is so much going on, and it is a fascinating time to be a spectator.
Sure is, Michael.
Now, in international news, Israel's cabinet has approved a temporary ceasefire with the Hamas militant group, which should bring the first halt in fighting in 6 weeks in return for the release of dozens of hostages.
The deal is for a 4-day ceasefire, and Hamas will free at least 50 of the roughly 240 hostages it is holding. The first hostages scheduled to be released are women and children. Media reports ahead of the vote said Israel would free some 150 Palestinian prisoners and allow additional humanitarian aid into Gaza as part of the arrangement. A statement from Prime Minister Benjamin Netanyahu's office said the truce would be extended an extra day for every additional 10 hostages released by Hamas.
Binance Holdings Limited, the one-time largest crypto exchange in the world, and its CEO have pleaded guilty to anti-money laundering and US sanctions violations and will pay, how about this, $4.3 billion in penalties.
Yeah. Do you have that in your back pocket? It's one of the largest corporate payouts ever, Michael.
That is an extraordinary sum.
So the CEO, Changpeng Zhao, will pay a $50 million fine, and he must step down as CEO. But under the deal, Binance can keep operating. Binance admitted that it allowed transactions with Hamas, Palestinian Islamic Jihad, and Al-Qaeda, among other terrorist groups, on its platform. It was charged with 3 counts, including anti-money laundering, operating an unlicensed money transmitting business, and violating US sanctions. Zhao faces as many as 10 years in prison. He's expected to get no more than 18 months under a plea deal that appears to have saved him from harsher penalties that other prominent cryptocurrencies have faced. Still, as you say, for Binance to be able to pay out the $4.3 billion in fines and keep operating, they've made some money somewhere.
That is an extraordinary story. Massive stories today, Sean. It's been a really big show. They've got a great interview coming up next. John McMurdo, CEO of Australian Ethical.
A long way from investing in, well, anti-money laundering and things like that. In fact, it's the opposite end of the spectrum. It's all about investing to make the world a better place. And John's a veteran in the area, so well worth a listen. If your investors should listen, but if you also think that your money should do more than just earn a return, it's a great chat to listen to.
It's quite an uncomfortable segue, isn't it?
Yeah,
to
it
go from anti-money laundering into a talk about ethical investing. But we did it. We pushed through.
We did.
Yeah, that's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 23rd of November, 2023. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, Facebook and X. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.